And I kind of view it as this too. People will sometimes go with the online thing because they're like, it's so easy. They make it so easy. If you go to buy a car and you're paying cash, how much do you spend on a Saturday or Sunday at the car dealership going over the finance for a car? Yet you want the biggest purchase of your life to be done in 15 minutes and not talk to someone that's going to walk you through everything. So you are willing to spend more money figuring out how to finance your car than to figure out the home that you're going to live in for the next 20 to 30 years.
Hey, you got a good point there, but I don't like being equated with like car salesmen.
True.
Come on, man.
Welcome to the Uncensored Real Estate Podcast, where nothing is off limits. If you're interested in buying, selling, or investing in real estate, and you want to learn some of the insider secrets and uncensored truths from the true professionals in and around real estate, you've come to the right place. Now, let's buckle up for the uncensored truth about real estate and join your host, Brian Cardenas.
All right, everybody, welcome to the Uncensored Real Estate Podcast, where nothing is off limits. And today we wanted to bring you a special guest from the other side of the country in North Carolina. We've got Matt Brady. Matt, I want to say welcome and thanks for joining us.
Thanks for having me on. Happy to be here.
Cool. So, yeah, Matt and I got to know each other through a coaching group that we're a part of. Spent a little time having some drinks in an English bar in Fort Worth, didn't we?
Oh yeah, definitely.
In Florida.
Good times. Good times. It's crazy how everything goes full circle.
Yeah, and now it's very interesting. We've both made a move recently in our careers to join UMortgage, and so I thought Matt would be a great person to bring on and really talk about some of the things that are going on in the market, as well as some things that we can help consumers out with. Because I think Matt, if you can just kind of give us a brief little story of your career and tell us kind of how you got started and where you ended up, or how you ended up where you're at now.
Definitely. So I actually started as I was a full-time Charlotte firefighter, and being a firefighter, you work 24-hour shifts, but you only work days a month. So I had a lot of free time, and I've always had an entrepreneur spirit. So I ran several different businesses. And one day while I was personal training, my buddy, he was like, why don't you get your loan officer certification? And I had my real estate license. My fiance is a realtor. And he's like, why don't you work one side and her do the other? Realtor wasn't really the thing for me. Staging houses, architectural, stuff like that, I didn't really care about. So this was a much better fit. And I've always had a business coach helping with my personal training company and stuff like that. So I always saw the value in coaching and, joined Next Level to really learn the basics and stuff like that. So I started with a retail company just as a loan officer. And it was toward the middle of the refi boom and killed it. My first 3-4 months in the business was like 7 million, 32 deals. And it was just going through my phone, going through my fiance's phone, just refining. I didn't do one purchase deal. Then last year, made the move in August to go to a producing branch manager role, staying in retail. Was always told broker world's bad. Don't talk to them. You don't control the process. It's
the lies.
Apart. So, I was always content with the retail and really just stayed focused on doing my daily ATMs and, over my first full year, did over 20 million, 90% purchase business. So it's been a good thing. And then made the move to UMortgage in about July, end of July, early August this year. And it was a lot of it based on how the market was going. I felt like we weren't competitive in some areas where we needed to be. And I'm very big on the client experience and educating buyers and really walking them through the process. But how can I honestly be an advisor to someone knowing that I had higher rates than what they could get elsewhere? And that was one of the big things that made me make a jump.
So let me kind of unpack that a little bit for just the general consumer. There's different ways and different places that people can go to get loans. Sometimes they might go to their bank. Sometimes they might go to an online lender. Sometimes they might go to a mortgage broker or what we would call a retail mortgage banker. Maybe we should just talk a little bit about what the differences are in those four things, and maybe what are some of the things that people get told that aren't true? Because you kind of touched on that, like they told you don't talk to brokers, they're bad. Yeah. And that is definitely something you hear in the retail world quite a bit. And there's a lot of really, just flat out lies. Let's just call them what they are. There's lies that are being told about one channel or another. So let's talk about first, the banks. What are some of the advantages maybe for the consumer of working with a bank, and then maybe some of the disadvantages?
If you're a high net worth individual, and you have a lot of money through the bank, whether it's through checking and savings accounts, investment portfolios, they want to keep that money there. So they're going to give you usually a better rate because they might portfolio a loan where they're going to keep it on their books. They don't have to worry about selling it on the secondhand market to Fannie, Freddie, Ginnie Mae, anything like that. Some of your jumbo products might be a little bit better because they can, once again, portfolio that in-house. But I feel they're using the mortgage to get your deposits. They want your regular banking, and that's why they'll incentivize you through the mortgage to get your regular banking.
Yeah, and that's a good point. Like, one of the things that people are seeing right now is when they're potentially looking at an adjustable rate mortgage, and they're seeing some of these things out there. That is a place where people can get a pretty good deal oftentimes at a bank or a credit union, is because they're lending their depositors money. They're not having to worry about trying to sell that loan on Wall Street and what investors are going to pay for it. Because right now, with the way that the market is, the Wall Street investors, when they buy a mortgage, they want that to stay on the books for years. And we all anticipate that there's going to be a rate drop somewhere in the next maybe 6 to 18 months. And so it doesn't make a lot of sense for an investor on Wall Street to buy this loan, pay a bunch of money up front, and then have it on the books for a year, because they'll lose money that way. So they just don't want to, especially buy a product like an adjustable, where most people get those for a really short term period of time. Banks don't really care because they're not having to shell out a bunch of money to buy that loan. So, they'll go with that adjustable rate loan and give people a pretty good deal. What's the downside though of working with a bank?
Usually longer closing times. They can't work as fast as we can. Getting answers on night and weekends. And what you need to ask yourself is, when are you going to be looking at homes? Nights and weekends. When do you need your answers for that? Not all cases, but for most cases, a banker is probably not going to be paid on commission. So whether or not they close that loan or how fast they are, I don't feel like they're that as concerned about it. I also, like you said, you can sometimes get a better deal on an ARM or on a product from a bank, and they might offer 100% financing and stuff like that. But a lot of times they are just building stuff into the rate to give you that stuff for free too. That anybody can do. We just need to lay the expectations out there for you in the beginning of what the true cost of the loan is.
Right. So let's talk about then some of the online lenders that people, might know about, or just, go online and start searching around. What are some of the pluses and minuses that they might have dealing with those type of lenders?
You can usually sometimes get a lower rate, but what you need to equate is lower quick. Usually the lower rate has a higher cost in most cases, unless we'll go through other routes of getting a loan in the future. But they advertise a gimmick rate, not looking at the fine point of, hey, this includes 1 to 2 points in this rate that you're seeing. It might be where they're not even having a loan officer on that, because you're just uploading everything in the file. It's super fast. They're not having to do a lot of the legwork. Or if you're not in this box of this credit score, W-2, no bonus, no commission, no variable income, not self-employed, they can easily check the box. That's what you're going to get, because you're not going to have the loan officer walking it through the scenarios. You might go under contract with that. They're not going to work as hard to push through any conditions, and they might just decline the loan, to where you're going to end up going to someone like me or Brian to help save the deal, because we'll go that extra mile that they're just not going to do if you don't fit in that box of speed for them.
Yeah, you touched on a couple of, I guess I would say, pet peeves of mine about people working with an online lender. And the first one is that the advertised rate thing. And Rocket Mortgage is notorious for this. You know, they'll quote you a low rate, but they will absolutely have anywhere from, I've seen 2 to 4 points built into that pricing. And they actually have sales materials that they send out to the consumer that talks about all the benefits of the financing that they're doing. And they don't get into the actual cost of that. One of the ones I've seen is they basically were doing a cash out debt consolidation refinance for somebody. And I think it was about 4 points that were being charged, but it wasn't put on any of the sales material. What was put on the sales material is, I think it was 77 months for a break-even point or to recoup the cost or what have you. Yep. But she was saving like $800 a month or something like that. And I said to her, well, let's do a little quick math here. You know, if you're going to save $800 a month, but it's going to take you 77 months to recoup that, just multiply those two together. And what do you come up with? And it was, I don't even remember what it was, but it was some crazy expensive amount of money for her. And then I said, okay, did you get that loan estimate? Yeah, I think I e-signed it. So I made her go back into the e-signing thing, because as we all know with the e-signing technology now, like when you go in there and you click to start, it just shoots you to the next place that you sign. And then you sign that one, it shoots you to the next place to sign. And the interesting, brilliant thing that our government did when they redesigned the loan estimates is there's not a signature line on that thing. And so it just scoots you right past it to the next place you got to sign. So unless you know what you're looking at and you dig around to find out, what am I paying to get this interest rate, people can miss it really, really easily. So I think that was it's a really good point that you make there, because I'm sure you've seen that where clients are looking at just the rate and they're not paying attention to the cost.
You see it a lot even with VA loans, you know, with going back to the banks of built-in points right off the bat, you know, 1 to 2% origination, whatever. That I see a lot on VA loans that is not a standard practice. It's just something that individual entity is doing. Yeah,
it's a big problem out there. Is the other piece of the online lenders that just kind of, you know, irks me a little bit is what you touched on is you have an individual loan officer. If you're dealing with a local mortgage banker or broker, you know, that's tends to be more experienced. They're going to be a high touch, you know, very involved in helping you structure things the right way, helping you think long-term about what kind of loan are you doing, what kind of interest rate choice are you making. And most of these online lenders, they just don't have that level of expertise. So, you know, like you said, you got to fit in that little box. They know how to take your application, upload your documents. And oftentimes they're not even looking at the documents to really determine if you're qualified or not. They're pushing it off to the next person in the conveyor belt.
Yeah. And I kind of view it as this too. People will sometimes go with the online thing because they're like, it's so easy. They make it so easy. If you go to buy a car and you're paying cash, how much do you spend on a Saturday or Sunday at the car dealership going over the finance for a car? Yet you want the biggest purchase of your life to be done in 15 minutes and not talk to someone that's going to walk you through everything. So you are willing to spend more money figuring out how to finance your car than to figure out the home that you're going to live in for the next 20 to 30 years.
Hey, you got a good point there, but I don't like being equated with like car salesmen. Come on, man. You know, like when you sit in front of the finance manager, like, oh my God, it's like, it's pulling teeth. It's like, I mean, I've gotten thrown out of a couple of car dealerships because I know my numbers. And when they try to snow you with all the numbers, it's like, no, you can't do that here. That's not how it works out. I pull up my calculator.
It's just more of just taking the time to really flesh out all your options and learn your goals of buying the home, how long you want to be in the home for, what are your long and short-term financial investment goals with you as a homeowner? What are you looking to try to do that a lot of people try to rush to do? They just want to know, what's your interest rate? What's your interest rate? What's your interest rate? And there's so much more that goes into finding the right mortgage solution. That's so much more than interest rate. And that's where it's like, just take the time to go through the process to make sure you are finding the right situation for you and your family on what you're going, the biggest purchase of your life.
Yeah. I guess I'm going to have to go back to your car analogy here, because it does make sense in terms of, a lot of times when you go to the car dealership, they get you focused on what's your payment? What do you want your payment to be? And then they'll structure the financing in a way to get you the payment that you want. And while, that can be done with mortgages a lot of times too, it definitely can put people in a bad situation, because, you can pay a lot of extra money up front to buy that interest rate down lower and get that payment lower. So if you're really trying to hit a target payment, you can do that. But in an environment like this, where we expect rates to come down, in the relatively short term, I mean, spending a ton of money to lower that payment and then turn around and refinance it in a year or two, that's going to be a huge money waster for people. And so that's where people got to spend that time, finding a professional, like you're saying, to talk about all that stuff. Like, don't get the blinders on where it's just, I need to get a loan, I need to hit this payment and get in a house. You got to be thinking, 5 years down the road. And then, so we've talked about two of them. Let's talk about retail mortgage banker. Kind of explain what that is first, and then we can talk about pluses and minuses, because we both came from that world just a month or so ago.
I think it is a really great place that usually you have quite a few loan options. You can get in most cases, you get a better trained LO, depending on the company, because there seems to be more training put in to learning your craft depending on where you work at. I worked at one place where the training was great and one where the training wasn't so well. But I feel like I don't know. It's like I was mesmerized for 2 years because I thought that's all it was, and until you see what else is out there. I think retail has its points where, yes, everything is in-house, but it all depends on the system that it's built around. Where they say, oh, the underwriter's in-house, all steps of the process, is in the house. We have low rates compared to other retail lenders, but it's not compared to what else is out there. Like, it depends what you're comparing to. Am I comparing apples to apples or apples to oranges? Where once we get into the broker channel, you realize all the extra fluff in there, extra management levels, extra staff like that, is how retail is. It's great for some people that need to go in there and feel total, I don't know. Like, I feel like since I went through it, it wasn't all it was cracked up to be once I saw it, but it definitely has its place, and it depends on the company. Good training, streamlined process, good loan options, not necessarily the most competitive rates, especially in a market like this.
Yeah, I think, let's see, I think I had 5 different retail mortgage bankers that I worked for. 6 in my career. And I think you might have got lucky in getting good training, because I never got good training in all of those different stops. And it might have just been a function of, like, when I first started, this was a long time ago, I feel like it was before the internet. I'm not sure if it was. Yeah. But, I got a big 3-inch binder thrown at me of Fannie Mae guidelines and said, here, read this. And then here's how you make a rate sheet flyer so you can go drop it in the mailboxes at the real estate offices. that was the extent of the training that I got, the rest of the time.
And it could have been, since I got started with coaching, I've always had a business coach or a next level kind of coaching kind of thing like that, to where maybe I'm contributing that training, equating it to because that's what I was doing when I was going through it.
Maybe. Well, I think from the consumer side of it, so the sales pitch that the consumer gets from a retail mortgage banker, and let me just define what a retail mortgage banker is really quick. They're basically a company that, like you said, does end to end. They'll take the application, they'll process the loan, they'll underwrite it, they'll prepare the closing documents, they'll fund the loan, and then they sell that loan off in the secondary market to investors. And so the thing that the consumer gets in terms of the sales pitch from a retail mortgage banker, like you said, is that control over the process, and that everything is done in-house. Aside from that pitch, to be 100% honest and transparent, like, there really isn't a benefit to the consumer in that channel. Like, there isn't one. I mean, I spent 10 years in that channel with different companies. There might be, some tools and some marketing and analysis stuff that they kind of provide to the loan officers to help the clients, but none of those things are proprietary or exclusive, to that channel. They may have a little bit more of a developed like online application process, but that's definitely not exclusive to the mortgage banker, the retail mortgage banker channel. And I mean, maybe I'm missing something, but I just honestly cannot see what the consumer benefits by going through the retail mortgage banking channel, because the rates are not better, 100% not better. Maybe
that's why I was kind of stumped. I was kind of stumped earlier, like thinking back, trying to answer, like, because you don't want to just say all the negatives, but it really is just how they can say, oh, everything is in-house, is really, like you said. Some of the tools I have, everyone else has. I always thought, oh, this is so good how we deliver this, until I found out what Arrive is and started working through Arrive, and I could cut some stuff out that I was doing before, because now it's all in here, and stuff like that. So
yeah, it was not a trick question, but it's a hard question to answer, because like, when you really honestly look at it, they're for the consumer. For the loan officer, there might be, because there's some benefits for the loan officers in terms of, maybe a little bit more support, a little bit more on the marketing support. So I can see why loan officers would be there. And obviously there was a reason why I was there. There was some things on the marketing side that attracted me to that and were good. But beyond that, in terms of just pure consumer benefit, I don't know one. And so let's now talk about like the mortgage broker channel. What are some of the pluses and minuses of the broker channel for the consumer?
Where we can, obviously, number one, especially in a time like this, it's not, let's just simplify and say lower rate fees. What that means to you as a home buyer listening to this, or as a realtor, or even another lender thinking about making the jump, you are increasing the affordability and the buying power for your home buyer by able to offer them lower rates and fees. That is what you're giving them. In a rising rate market, you are getting them to where they were, where a retail lender was 6 months ago. We're at that right now, because of the streamline in pricing and not the bloated corporate structure of having to pay, other positions and stuff like that. They cut all that out, and it's a streamlined process. So you can still get the same service, the same client education by going with a broker. And I think our CEO, Anthony, said this great, where he says retail lenders sell service, client experience, whereas broker, we sell service, client experience, and better rate and fees. There's just, you get the best of both worlds with it. We have lots of lenders we can go to. There's a lot of products that we can go to. There's a lot of, if you have a tricky situation, we have a lot of avenues to go to that person. And if one lender's pricing bad, we go to another lender, and can find you that best pricing at that day. Not everyone prices the same, and you can find an avenue, With us, there'll be some people, if you're buying second homes or investment properties, that we have access to that can get you a better rate than what's out there on the market from a retail side. A perfect example, I don't, when this will get posted, but they announced yesterday, so this is September 8th, that conforming loan limits will be going up to $715,000. As a broker with UMortgage, can give that loan amount now, where if you're on the retail side, you might be waiting 60, 90 days. Hell, you might even be waiting to 2023, January 1, 2023 to be able to offer that, where we can offer that now. And that means less down payment. That means more buying power, more affordability for your home buyer.
So what's the downside then to working with a broker?
Not coming to them fast enough.
that's your downside, man.
I honestly don't really see it. Like, people say, oh, underwriting's not in-house. If you go through your Facebook feed, go through your Instagram feeds, and you're seeing fast clear to closes, I'd be willing to bet a majority of that is from the broker side. So if the broke process was so broken and they didn't control the process, how are we getting clear to closes in 8 days, 7 days, 10 days, 14 days with appraisals? How is that happening if the process is so bad?
Yeah.
How is it that, growing, not just company wide, but volume that the company does wide, if the process was a broken process?
Yeah, I think that's the biggest myth or misrepresentation that the consumer hears out there, and realtors hear out there for that matter, is the lack of control of the process. And if COVID taught us anything, besides don't wear masks everywhere, it is that everybody can work remotely. And the mortgage business, I bought into that, because I used to work in an office with the underwriters in an office, and I could literally walk down the hall and go talk to them, talk through a scenario, get an answer. And that was convenient. And, totally honest, it was very convenient. It was very helpful. But then once COVID hit, everybody was working remotely. We just found a different way to have that conversation, whether it was, direct message or email or phone call or whatever. You weren't sitting down the hall from your underwriter. Well, your underwriter could have been, 10 miles from your house working from their house, or they could have been, in a different state working, but you still have those open lines of communication. And so that was the one big fallacy, is like the lack of control. And the other piece of that lack of control thing that is crazy is that, they try to make it perceived that, because they're in-house, either, processing, underwriting, docs, funding, whatever, that they got more control over it. But we also saw during COVID that when things get busy and the volume of business increases, it gets slower. And when you are if you have your loan application with a retail mortgage banker and they slow down and they're taking a week to get a file underwritten or even more, there's no options there. In the broker channel, if you've got a lender that's slowing down because they're getting backed up, or to your point, like their rates are not good, they've gotten too busy, so their rates have gone up, then you switch, go to a different lender. Use somebody that's got better turnaround times if that's the need, or got better rates if that's what the need is. And so it really does give your loan officer more control over your file, and therefore you more control, because they can direct it where you need to go, as opposed to just being stuck with whatever their company has.
I think it's even more important too, once you're under contract and a sticky condition comes up, that you got to move the lender to help get that person through, because not every company has the same guidelines and follows every single thing. where they might be more lenient on this view of looking at income, where this one's more strict on this side, or property type or stuff like that. That the broker channel, we have that ability to and the borrower might not even have to know. We keep them, we make the process stress-free for them because we can handle that in-house without having to bring that and let them worry about that you might not have at the retail channel if something comes up like that.
You want to buy a house, but high interest rates have got you down? Take the rate challenge and send us a verifiable loan estimate from another lender, and we'll beat it and pay for your appraisal up to $600. Here at Give Mortgage, being powered by U Mortgage allows us to provide you with unmatched speed and efficiency and the best rates and fees in the market, all while delivering you the concierge level service you deserve. We want you to have an experience getting a mortgage that you'll never forget, and not because you got put through a meat grinder to get it. At Give Mortgage, we give great advice, we give the best rates, and we give back to charity. Visit us at www.give-mortgage.com or call us at 480-331-4684 to schedule a free consultation to see how we can help.
So tell me this, just kind of switching gears a little bit to the market that you're seeing. How are you guys doing right now in your market in terms of maybe how it was a couple of months ago? Obviously, we've gone through a big change, but I know in Arizona, we've been making a pretty rapid shift, and I'm not sure how it is for you guys.
I would say that it's more evened out. I watched this. I was watching a video, and the guy was like, last year it'd be like going down the interstate at 80, and then someone stopped in front of you, and now you're coasting 50 because there's more traffic on the road. You're not at zero. We're still at a pretty competitive market, but it's not where we were at before. And, it's not crashing. It's cooled down some. But I think it depends on the property. If it's a prime property and it's priced right, it's going to sell fast. If it has some work to do, where last year you might get 5 offers and waive, contingencies and inspections, now people are getting those contingencies and inspections. And at a sense, I feel like that's somewhat good for the market because you want a balance of not the sellers having all the power and not the buyers having all the power. You want a negotiation back and forth so everyone wins.
Right. What are some of the strategies that you're either seeing in the market or that you're coaching your clients to use today that you probably weren't even talking about 6 months ago?
One, definitely, whether it's on the seller or buyer side, instead of asking for price drops, asking for credits that you can use as, a buy down of, your interest rate if you want to get to a lower rate or to help cover some of the closing costs. I think still having a lender that is proactive and an advocate for their borrower, where they're still reaching out to the listing agent, letting them know how strong of a buyer you are, that you've been, pre-underwritten, that you check all the boxes, letting them know how strong you are. And just being, making sure. I made a post about this the other day. You're not trying to beat the seller, you're trying to just beat the other buyers on the market. So making sure that your offer is still strong enough where they don't see what else is out there. But you don't have to go over like you did before. You don't have to go 50K over. But, let's also, if the house is priced right, and it's going to appraise, then offer full price, get the job done, and move forward. If you go and try to underbid, they're probably gonna, because people are not used to it still. They still think it's a super hot market to where that might not work. It's just going to depend on the property. So, just making sure you're giving them all the right strategies and, yeah.
So, and you're spot on there. Like what we're seeing too is I just had a client who made an offer. It was on $800 and I want to say $30,000 listing, and they offered like $715. That didn't even get a response. So it's not shifted that much. But the hard thing for buyers and sellers too, and this is where, we'll talk about realtor selection is important, is you've got to really look and do the research on the properties, because sellers, to your point, their mindset is still stuck in what it looked like, 3 months, 6 months ago. And it's really not that way anymore. So for sellers trying to maximize and top out the market, unless you've got like an absolutely perfect, completely renovated, top-notch property, that's not going to happen. But those expectations still have to be reset. And that's a challenge for realtors because they're the ones who are having to try to reset expectations and still get the listing because they don't want to, be too brutal with the seller about the reality and then not even get the listing. But it's also pointless to start it too high. And they've got to look at the comparables that are out there. I know in my market, we've been having pretty good luck with appraisals, coming in. Actually, most of them lately have been coming above the purchase price. What are you seeing with your appraisals out there?
I've seen the same thing, coming in at value or coming in above value. And it goes back to what you said, making sure you have a competent realtor that knows the area, that just because you found them and it might not be a normal area they work in, they don't know the area, and can give you stuff. And working with us and how we have tools available to us through some of our partners, like a home evaluator tool and MBS Highways, Zestimate that they have on their MBestimate, and like using that stuff in coordination with the realtor and letting them know, hey, this is what we're seeing, this is what they're seeing. But then having that strategy with the buyer of, okay, if it doesn't appraise, what is our contingency plan on that? Okay, you're putting 20% down. Well, you can still get this house at 10% down and look at, yes, you have mortgage insurance now, or we can prepay it, but see how this doesn't change your payment. Don't let that make you not get the home if you have options. Now, if someone's coming with 3 or 5% down, it's a little bit different conversation, but having those strategies beforehand, I think goes a long way because you're prepping them for, hey, this is our contingency. If it does come in low, this is our contingency for whatever this is how we're going to overcome this, to where maybe you can bring the price down some because we can go with shorter due diligence because, the property looked good when you were there. It's, it's fully renovated. We've done our work on the lender side to where we're not worried about any stuff coming up on your approval. So negotiating that way then to get other stuff that you want.
So, and this seems like an obvious question. I'll ask it anyway, but I want us to elaborate on it for the average consumer. If somebody's just kind of thinking, hey, I might want to go buy a house right now, where should they start? Like, should they jump online, start looking for houses? Should they look for an agent? Should they look for a lender? Like, where's the starting point?
I feel like, and it's just not coming from our side, you need to get pre-approved, because the worst thing that you can do is say you start looking for $500,000 houses and you love this $500,000 house, but you can only get pre-approved for $350,000. Now, every $350,000 house that you're looking at, you're thinking of the $500,000 house, and you're not going to be happy with any of them. So why set the wrong expectation from the beginning? And my favorite question to, you get this all the time, well, what's the most I'm pre-approved for? Well, my follow-up is, well, how are you comfortable with your mortgage payment being? Like, say you're a top-notch A-plus borrower, and you can get approved for $800,000. But if you don't want an $800,000 mortgage, why are we even looking at that? It goes back to having a real conversation with your lender and finding out what's important about buying this home for you. Where are you comfortable at with your budget? Even if you're pre-approved for this, some people I've come across is they make tons of money, but they follow a strict thing. They follow the Dave Ramsey's, where like, I am not going over 25% of my income. Even though they have no debt, they can easily afford a higher mortgage. They have numbers in their head that they are comfortable with. So it's making sure you're getting all that stuff answered.
Yeah, and unfortunately, it's the opposite of what most people do. You get an idea, I want to buy a house, so they're on TV and they're seeing all these home selling shows, and fix and flip shows, and so they start looking at houses first, and then possibly reaching out to a realtor first, and then the last part of it is, oh, I got to pay for this shit, so I better talk to a lender to figure out what I got to pay.
public service announcement. If you're going to look at houses on the weekend, get pre-approved and get your application in before the weekend, so your loan officer can check and make sure you're good. Because how can you expect me to be your advocate to the listing agent on how strong of a buyer you are if I don't even know your file yet? So I am not willing to make that call to the listing agent if you just submitted your application and we can't do a deep dive into it to make sure everything's right. Yeah. Especially if you're self-employed, especially if you get bonus, commission, overtime, there's more work that goes into that. And would you want me to just pencil for pre-approval or give you a guarantee like you are good, everything is good, closing is guaranteed?
So let's tell the consumers then, what is the difference between getting pre-qualified or pre-approved and all the different terminology that people hear out there?
So basically just a pre-qualification is based off what you put on your application. The loan officer hasn't really looked at your documents, but based off basically the honor system. You said you make this amount, you have this much for your reserves. Here's your credit score. We're going to have to pull your credit score. This is what you would qualify based off what you put in your application. Doesn't mean much, doesn't actually mean anything. I don't do pre-quals. Pre-approval is when the loan officer, the loan partner calculates your income, checks your documents, basically checks all your CIAs, checks your credit, checks your income, checks your assets. Make sure there's no glaring things on your credit report, in your bank statements, no big deposits that we're going to have to source. We have your income dialed in, and we can give you that. The TBD approval is when we can take a next step. It's not needed for every borrower. If you're 740 plus, W-2, low DTI, plenty of assets, you don't need a TD when the underwriter looks at it, because the underwriter's probably like, why'd you send me this file to look at? It's perfect. I have other things I need to do right now. If you have variable income, if you have, a self-employed borrower, there's some credit issues that you want to make sure of, delinquencies, collections that aren't going to be big issues. The kind of house that they're looking at, there might be issues. You can go that extra route to get underwritten by an underwriter. The good thing about UMortgage is a lot of our operations leads for the processing team, I know mine, was a former underwriter for UWM. So you're getting an underwriter to look at the file from the beginning and getting their eyes on it. And she is the next step of, if she has a question, she'll reach out to underwriters at other companies and be like, hey, will this work with you guys? We can do that stuff too.
Yeah, and that's really helpful for, the consumer who has a little bit of a tricky situation is, to vet that, but have those options and choices to be able to go to different places. Because like you mentioned, there's different companies that interpret things, different ways. Like there's a standard set of guidelines that we all operate under, but some lenders are a little bit more restrictive than that. And so, and some of it, believe it or not, there's a gray area, to some of these things, and there's interpretation, so that the choices that you have are really important. And I think, another good point that you brought up is, get that process started. Like we've been just talking about, is the financing is going to make such a huge difference to what you're looking at, what you can afford. I do the same thing. We actually give two different sets of numbers when we get somebody pre-approved. We tell them the maximum that they're qualified for, and then we tell them, here's the price range that you should be shopping in to keep your payment where you want it. And then that way somebody knows, if we tell them be shopping in 350, but you qualify up to 400, they find something at 360 or 370, they know they're good. They can go ahead and make that offer, and we provide them, numbers at different prices. So they know, okay, well, this is going to mean X amount of difference in my monthly payment. Because that's where we all go to, like when we're figuring out what can we afford. It's hard to conceptualize what is the difference in affordability between a $350,000 house or a $400,000 house. But if it means that it's, $200 a month difference, I can easier, figure that into my budget.
Definitely.
So if we get the public properly educated to start with the loan officer, to figure out their budget, their qualifications, and then they're going to the realtor. how can people figure out the right realtor to work with? And what are some of the questions that they should be asking realtors? I've interviewed a lot of realtors on the show, and I get their perspective, but from the lender's perspective, we kind of get to see behind the curtain a little bit. What do you think are some good things that people can ask?
What area, is there expertise of a city? There's a lot of area. We're right on the border, North and South Carolina, where I'm at. So there's a lot of towns, there's a lot of neighborhoods, there's a lot of stuff around here, and each has their own positives and negatives, not just on, the benefits of living in that home, but also the comps in those areas to make sure you're finding the right, finding someone that's going to be a good negotiator. I think asking them, how many deals have they done in the past 12 months? Have you done more buy sides? Have you done more listings? Just knowing where they're at and with their team and getting their market knowledge, and asking your loan officer too, have they worked with, because it's so important to have your home buying team set up where they have good communication and good rapport of working back and forth with each other. The realtor, your transaction coordinator, that would be another question, is how is your team set up? I know some realtors that use a transaction coordinator. So once they get under contract, they don't deal with it anymore. Their TC does. So who's that contact? How much interaction with that person are they going to have? So I think that's a big part too, is finding someone that your lender can vouch for too, that have worked through the process, that is there and can communicate.
Yeah, I think that's a really good point. And I don't think I've had anybody bring that up, is talking about what the team structure is and, who has the responsibilities for certain things. Because there's some agents, that are big team leaders, and, you might go in and sit down for a buyer consultation with them, and then they've got a showing agent that's going to actually be the one to take you around and look at properties. And the team leader might just be writing the offer and negotiating the deal with you. But who knows, that selling agent, if you've never met him before, that might not be somebody you want to spend much time with. That's going to suck through the process if you can't stand that person that's the showing agent. So I think it's a really good thing. And along the same lines, and one of the guys at our company posted a post about this the other day, is what about either a realtor or a lender having to give out, 3 names of agents or lenders? Like, what's your feeling on that? I think, one thing that we know, and maybe some agents don't know it, but it's not required. There's a certain idea behind why you would do it. Give me your feeling on it.
I feel what I like to do with my realtor partners is set the expectation of, when you give 2 or 3 names, you're causing confusion with the buyer. Just how we talked on this podcast today. You give them me, you give them a retail lender, you give them a banker. You're going to get 3 different explanations on what's good for that person, from whatever, they're getting conflicting information. What I say is, if you feel, would you let me do your home purchase? Yes. Then you should refer me to your clients and have them meet with me, interact with me. If after that call you ask, oh, how did it go with Matt? We just didn't connect personality-wise, they didn't like what I have to say, then take them to the second person on your list. But if you give them 3 names off the bat, you're just causing confusion with so much information out there. A confused buyer doesn't buy. So you're causing confusion. And I tell my realtors the same thing. So if I get a lead and I send it out to you, do you want me to send it to 2 or 3 realtors and you bid on who's going to get it? And I hadn't had one realtor say yes.
Shocking, huh? Well, I think, the mindset of those that insist on doing that is that it comes from a place of fear. They're doing it because they're afraid that somebody's going to drop the ball and they're going to get blamed for it. And so we see that, agents say, well, I don't want any liability for somebody making a mistake. And I think, my response to that is, if you're afraid that your lender is going to make a mistake, that's not the right lender. Like,
why are you even referring them then?
Yeah, that's not the person you should be referring. You need to get a better resource for your client so that you feel confident that, there's a very low chance of making a mistake. Now, granted, everybody can make mistakes. We're all human. It's not impossible for it to happen, but you also should know, how is that person going to handle that experience? Are they going to step up to the plate? Are they going to solve it? Are they going to find a solution? Or are they going to start avoiding phone calls? Because that happens. We hear that a lot, in the industry, that the realtors say, I can't get a hold of the loan officer. There's something going on. We're 2 days before closing, and they sent this big giant list of things to my client, and now I can't get a hold of them. So I think that's like one thing for the realtors that are listening is, if you don't feel like you're 100% confident in who you're referring, you're not really solving it by referring 3 people that you don't have confidence in. And you're just throwing the responsibility for making that decision onto your client, who does this a few times in their life. They're a lot less likely to make the right choice than you are as the professional that does this every day.
Yeah. I totally agree.
Huh?
Totally agree.
So let me kind of just tie this up with one last thing. We always try to find out, because as we're trying to educate consumers here, a lot of times there's a glaring thing that, the professionals kind of either know that people don't really understand about either mortgage or real estate, but they really should. Can you think of one big thing that you think the consumers should know about that they really don't understand?
Interest rate is not the most important thing with getting a mortgage.
Yeah, that's a good point. I think we elaborated on that already, huh?
I think that's the number one thing. And I think I made a video about this the other day of how in our industry, there's a very low barrier for a loan to become a loan officer. You take a 20-hour course, you pass a test, and now you're giving people advice on the biggest purchase of their life with no financial literacy required. As a loan officer, you don't. So I feel like you should find someone that has the education, that's continuing to learn their craft and learn the process and learn about financing to better serve you as a client at the end of the day. And someone that is not just viewing this as a 30-day transaction, but a 30-year relationship. I feel like that's what everyone should be searching for in their mortgage professional. You should find someone that you want to go to whenever you think, oh, should I refinance? You should be, that loan officer should be reaching out to you when it's the right time too. You shouldn't have to reach out to them. But if you have those questions, have that person you can go to. You should have that loan officer that you feel like as you grow your investments, want to buy another house or upgrade your house or get into investment property or a second home, you have that go-to person. As you have kids, you should want to refer to that same person. That's the experience that I expect out of myself and my team, that you become a mortgage advisor and not just an order taker in this industry.
Yeah, you're right. And it's sad that the barrier to entry is so low. I think that sometimes when you get people who can get into a business and don't take it as a profession and don't value the importance that they have in the advice that they're giving to their clients, you can walk away with, less than ideal results. And that kind of really taints the industry as a whole. That's why I think it's so important that, whether it's, whoever you're working with, I think obviously I have a preference, and I think that I feel like there's the best route for people to go. But even if it is with a retail mortgage banker, find somebody local, find someone that's near you, that lives in your community, that has relationships with the real estate agents, that basically understands that I need to do right by my clients, because my reputation as a professional in the industry, in the community, is really important. And I can't be somebody that, like you said, is transaction based, where I don't care what happens with this one because I got the next one coming in the door. And I feel like that's where, the downside of some of those online lenders or even the banks, like they've got a marketing machine to bring the next person in the door. So they're not terribly worried about how many actually make it through successfully and in one piece, to the end of the process, because the next one's coming to the door, in just a few minutes anyway. So I think that's a really good piece of advice is, find somebody local. Don't focus on the interest rate. That is not always the most important thing. And have somebody that's really valuing what they're doing for you long term.
Yeah, I think that's perfectly said.
Well, hey, I really appreciate you taking the time out of your day and joining us here today. Hopefully we brought some good information to people. If our clients are thinking about moving to your part of the country, tell us where you're licensed at and how to get in touch with you.
Yeah, so throughout the East Coast, from North Carolina, South Carolina, Georgia, Florida, you can find me on Instagram at Carolina Mortgage Coach _Matt, or on TikTok at Carolina Mortgage Coach MB, or just add me as a friend on Facebook. We're always posting content on there. If it's just to ask some advice, we're just here to give it. We're always trying to put out just quick content, whether it's mortgage related, finance related, just really making sure we can help you build wealth through real estate and home ownership.
And you're a really good dancer on TikTok too. I just
thanks.
All right, man. Thanks a lot for joining me today. And all of you, thank you very much for joining us on the Uncensored Real Estate Podcast. Make sure that you subscribe, like, share the episode with people that you feel like could benefit from the information that they heard today. And we'll look forward to seeing you guys next week. Take care.
Thanks for joining us, and please remember to go and subscribe, like, share, all that cool stuff to help us grow, and come back to listen to our next episode. Until then, go out and live life uncensored.
Thanks for listening to the Uncensored Real Estate Podcast. Don't forget to help us out and subscribe. Follow and give us a 5-star rating on your favorite podcast platform. And check us out on YouTube for the full video podcast. If you want more information on any of the topics discussed on today's episode, email us at uncensoredrealestatepodcast@gmail.com or give the Cardenas Mortgage Team a call at 480-331-4684.